really, at the end of the day, it's just the matter of a macro market. It's just what happens.
That's why it's really important to have a plan. Have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this degen?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is impermanent loss. With single-sided staking, you don't have to worry about impermanent loss.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, to where you can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Good evening, ladies, gentlemen, and D-gentlemen of all ages out there. Welcome back to the D-Gen Roundtable. This is our flagship Sunday show, and tonight we're going to be talking about a potential new stock exchange, the SEC having to close up shop in a different area, and then also we have a smattering of tweets from social media that have a bunch of relevant points and a bunch of hot topics that we're going to be covering tonight. Additionally, we got some upcoming macroeconomic events we're going to be talking about, CPI and FOMC for everybody out there. And as well, we have our TA expert in the house, and the market has been doing some interesting stuff lately. So we definitely want to cover everything going on there. Speaking of which, I am Zenith, but tonight I am joined by two of my excellent panelists and co-hosts. First off, we have Agent J. What's going on, brother? How you doing?
What is going on, family? You filthy degenerates in the chat. Glad you guys could all join us this wonderful evening. Look, man, people have this. We all know that people tend to have recency bias, right? And they panic that Bitcoin dropped like 2 to 3% over the past few days, and the altcoins are taking a dump. But they don't realize that Bitcoin has been closing above all-time highs for a considerable number of days over this past few weeks, right? And so the momentum is clearly on the hands of the bulls right now, and we will certainly display that by all of the different articles and the data that we're going to present you guys today. But it just amazes me, man, how people fail to realize that just because we took a 2 to 3% hit doesn't mean we're going to start the next bear market, man. It's like, bro, if you've been in here for like more than a year or so, you should already know what the deal is when it comes to these big players entering the space. They're going to try and fudge you out of the market. And look, the long story turned short is just like, hold your bags, bro. If you've been here since 2022, the bottom of the bear market, like, don't get footed out, man. Just hold on to your bags. We got about a year more to go. And it's like we're at the precipice of that parabolic move that always happens post-halving, right? So just be patient, guys. Just be patient. But as far as how I'm doing great. Closed a whole bunch of deals over the past few days, so got a lot more dry powder to deploy into this market. And yes, I am still deploying into this market. So, you know, we mean the same shit, different day. Working on the business, working on the charts, accumulating more dry powder because I like crypto, man. How about you, Nate? How you been doing, buddy?
Oh, having lots of fun. I've been degenning all day over there on base. I've been rugged a couple of times, and sadly, but I've also made some money though too. Currently on Pepe Trump, I am up 3x. So I threw 0.04 ETH into it, and now I'm almost at 0.12. So let's fucking go, guys. I'm a filthy degenerate. Let's go ahead and get this show fucking started, Z.
True. I'll tell you what, to get the show started, we're going to say hello to all of our friends that are out there and joining us on a beautiful Sunday evening, I have to say. So, first up, we're going to go to the Funk Master Hex himself, raising a glass. I mean, I got coffee here for you, but cheers, mate. Good to see you. Always a pleasure to have one of the OGs in the chat. Ooh.
I got no ice cubes in it, though, unfortunately.
Bummer. Alrighty, up next, we have Hexagon Lost in Asia, who did make it just in time for the strip club music, which is good to see. He says, it's so funny to see everyone complain about an unfollow. This is just the next chess move. This is in regards to a recent, very hexagon specific event, which is that Richard Hart posted a tweet saying that, Satoshi Nakamoto doesn't follow anybody and Bitcoin's doing pretty well. So then he just mass dumped everybody and he has 0 follows right now.
And then, everybody on Twitter started complaining, oh my God, Richard unfollowed me. My heart, it is broken.
Not personal.
I cannot recover. Like,
nothing personal,
get the
kid.
Fuck off the internet, you losers. Jesus, man.
Look, it's just a bit of a reminder that a lot of times we're pretty chronically online here, especially someone who works a desk job like myself, which is, cool, can't wait to go to work to sit at a computer. Oh, cool, can't wait to get off work to go sit on a computer. I'm just like, oh, God.
Yeah.
Yeah.
Like, unless you're like us who scour all of the Twitterverse for crypto news, because Twitter is undefeated when it comes to providing crypto news, then you should probably get off. I always tell those people, sorry, my Asian came out. Twitter is where civil discourse goes to die. So get the hell off of Twitter unless you're using it as a resource to give yourself a leg up on the crypto news, because that's where it goes first and foremost before it really hits anywhere else, right? So yeah, man, don't get butthurt because Richard unfollowed you. Okay, he's trying to make moves here, so give the man some fucking space.
That's true. That's true. Alrighty, back to the chat shoutouts. We have the #1 crypto cheerleader in the entire space, Tam Tam. She says, "What is up, fam? Good to see you, Tam Tam. I did see the tweet that you shot at Richard Hart about our conversation on Book Club on Friday about conscientiousness or conscious thought. God, I absolutely just butchered that. But I was like, this is kind of funny timing because I don't think Richard's doing much of the social media stuff anymore. Although if we can get him on the channel, we will. Keep trying.
Did you see? So I don't know if this has been verified, but there was somebody had a thumbnail on one of his videos. Apparently, some of the OG Hexicans are they're really starting to lose patience. Heidi, I think, posted a comment on one of Richard's recent tweets. She was like, "Richard, do a fucking stream." I was like, "Uh-oh." Oh my God, even the fangirls are starting to lose patience now, man.
Yeah, you might be onto something there. Although I wouldn't be surprised if, honestly, there's a bit of a progression that Richard has had, which is that he was like, oh yeah, we have a great community. And then he just started to get more irritated with all the influencers and all the streamers and stuff. And he's like, all right, y'all are just getting on my nerves now. So maybe he's just doing this despite all of us that are causing him annoyance, but it's all speculation. Alrighty, on to the next one. Another good friend of the channel. We got Dre Sims. He says he is staying poor. That's not possible when you're on here. I mean, unless you're literally misclicking 100% of the time.
I think I know what he means. I think I know what he means. I think he means he's cash poor but crypto rich.
I like it. I like it.
It's okay if you're cash poor, bro. I'm cash poor too, but I'm crypto rich.
Cash poor, time poor. Whatever it takes to get that dirty fiat in crypto, we fully support that over here. Alrighty, we have one of our very own, Brendan from the DGen Roundtable. Never heard of it. He says, DGens! Good to see you, brother. We are looking to have you on Wednesday. Wednesday is going to be a bit of a departure from the usual. However, it will still be, it's usually would be the Whiskey Wednesday. However, this week is a bit of a special date for us. So we're trying to put on a special show for you guys. That is what we got with that. That was as much as I have for now. Alrighty. On to the last chat before we get into the topics today. We have Hex Glenn. He says, hello all. Hello, Hex Glenn. You have been killing it with catching all the streams lately. So glad you're part of the live gang, but also shout out to everybody as part of Replay Gang. We appreciate you guys out there for rewatching the videos, liking, commenting, subscribing, all that stuff. All the YouTube pleasantries. And learning.
Thank you
all. The likes help us. The learning helps you guys. Yeah, we're also trying to learn at the same time.
Like the damn video.
Yeah, like and subscribe. Right fucking now.
Somewhere. That's right. We gotta shill ourselves for a little bit at least. Okay, that is what we got. Gentlemen, are we ready to... I know we were literally just kind of crapping on Twitter and how it's a cesspool, but are we ready to dive into said cesspool?
Yes. Yes. Let's do
Okay,
it.
I will be sharing. So, Mrs. Producer, if you do not mind, I have the first tweet of the evening. Alrighty, so up first we have Watcher Guru. Excellent account, by the way. Highly recommend checking them out. They have a lot of breaking news updates, and they're pretty good about trying to weed out the chaff from the wheat. Up first, we have Van X CEO predicts that Bitcoin is going to reach half the market cap of gold.
Mm-hmm.
What do you think?
And they predicted this within, I think, within 2030, if I'm not mistaken. And so currently you have the market cap of gold at about 15.5 trillion, I believe. Somewhere like
Yeah.
we got a few different estimates, but the consensus is about 15.5 trillion for the market cap of gold. Right now, Bitcoin is sitting at a paltry 1.3 trillion dollars in market cap. And so half the market cap of gold by 2030 puts that just a bit under a 6x, right? And so I'm not gonna do the math because I can't do those numbers in my head. But take the price of Bitcoin right now and 6x that. I mean, to be quite honest with you, the price of Bitcoin right now is at about $70,000, and we're predicting about a 3x on the high end at the very top of the bull market at around $210,000 to $240,000 Bitcoin on the high end by the very end. Yeah, by the very end of this bull market, which is projected to be around Q2, Q3 of next year. So that's not too shabby, man. So a 6x in market cap by 2030, I don't think that's too far-fetched whatsoever. Not at all. What do you guys think, man?
Well, the thing that I was looking at is like they were kind of guessing anywhere from 8 to 11 trillion for this cycle, right?
Real okay.
And yeah, for this cycle. And if we hit, let's say for whatever reason we hit 11, right? We only really need to get to like 15. So
Yeah.
that's not too far fetched to think that the next cycle we're going to be climbing and surpassing gold, you know?
Dude, 10 to 11 trillion market cap for Bitcoin this cycle is pretty like I'm conservative. You guys know I'm pretty conservative.
Oh,
with
my bad.
estimate.
My
That's
mistake.
wild.
Not Bitcoin itself. That was for the entire crypto industry.
Okay.
Two very different numbers.
Okay, you were talking about Bitcoin alone. My bad.
Yeah. I could see 10 trillion for the entire crypto market. Yeah.
That would be crazy though to get Bitcoin itself all by itself past gold. Man, that would be. What would that be, like 500K Bitcoin? Like,
yeah. So if we assume that 50% of the market cap would belong to Bitcoin, so if that's 5 trillion, let's divide that by 1.3. So that's a 3.85x times 70,000. That puts us at $270,000 Bitcoin, which isn't too high up above from the current estimates, right? If we're going to assume that Bitcoin hovers around that 50% of the market share of the entire crypto market. So 270, that's not too far-fetched. I think Bitcoin can do it. I think people are severely underestimating the power that institutions coming into the space, different countries coming into the space, and proper regulatory frameworks being created here in the West for Bitcoin, especially if we get a 2024 Donald Trump win. I think people are severely underestimating what this market is capable of. How about you, Z? What are your thoughts on this particular sentiment by Van Eck?
I mean, honestly, this stuff is kind of in line with a lot of what we've seen previously. Shoot, who was I forget the name of it was the female CEO that said that she anticipated Bitcoin going to $750,000 before the end of the decade.
Oh,
Kathy
Woods.
Kathy Wood?
Kathy Woods. I was gonna say Kathy Hochul for some reason. I don't know why I was.
Twinkie's gonna get mad at you, man. His big crush on Kathy.
True. All right, so we have 21 million Bitcoin. If we hit $750,000 Bitcoin, that is $15.7 trillion. That in and of itself is the current gold market cap right now.
Yep.
So even hitting something that's like half of that, which is probably what, just shy of 400,000, I think it's very possible. And considering all the different price targets we've seen thrown out, it's very much in the realm of possibility. And then also, just I ran a quick number. So if we go up to, even if we go up to 7.18 trillion market cap for Bitcoin, which is still short of the half of the gold market cap, that's a 24x from the last bear market low when it comes to market cap for Bitcoin. So it's like these are pretty realistic crypto numbers.
Yeah,
granted, Bitcoin is supposedly starting to have like fewer and fewer gains or diminishing gains as we go into the future. But at the same time, like these are still very feasible numbers. It's not out of the realm of possibility at all. It just kind of takes a little creativity or imagination to be able to think at least like 1 or 2 cycles in advance, and you can reliably get there.
Yeah.
Imagine telling people that you were buying $15,000 Bitcoin or $18,000 Bitcoin. People are gonna be like, "Whoa."
Well, we're all first cycle gang right here. Well, first full cycle pretty much. But when we talk to people that have been around for 1 cycle longer than us, or even talking to Donovan, who's gotten into it back about 12 years ago, like the numbers that people were buying things at was absolutely ridiculous. Like people were buying Ethereum for like single digit numbers, and people were buying Bitcoin for like sub $1,000. It's wild to think about. So if we're thinking about that now, thinking about how crazy it is back then, give it 4 years from now, the numbers that we have the access to right now are going to seem a little preposterous potentially. So there's a lot to come. It's only going to keep getting bigger and bigger. Ready? I think Jay stepped away for 1 sec, but we have another one. Right. This is NVIDIA versus Bitcoin versus Gold. Nope, I'm going to turn off the sound. Jay brought this one to our attention, which is that someone tracked NVIDIA, the stock, versus Bitcoin versus the price of gold since January 2020. And, well, you can see it for yourself. When crypto goes parabolic, it goes parabolic.
Yeah,
and
that's important to watch.
Time, yeah, she gonna crash too, so.
Look at it go.
But even though
the
like,
video goes crazy though too in this.
Oh yeah, NVIDIA is just going absolutely wild. But Bitcoin, even when it hit that bear market low there that we saw in that was 2020, that wasn't even bear market low. Okay, now we're getting towards bear market low because we had that double top. But it's like there's a lot of opportunity for growth and just capitalizing on some gains here. But stuff like this, honestly, is kind of reminiscent to what we talked about when we did the book club for Ray Dalio's The Changing World Order, which is that you can track things over a long enough period of time. And gold ends up doing kind of what it does here, which is like, even if this is a 30% gain for gold, according to this, over a course of like 4 years, once you start spanning this out over a longer course of time, gold is going to continue to show to be very stable. Granted, you're not going to get like the stupid high growth that you see here from NVIDIA and Bitcoin, but at the same time, it's pretty wild. This chart's kind of funny though, because look, NVIDIA here really outpaced Bitcoin towards the end. Although this is when we had a lot of investment, especially in the US, when it comes to, I think it was the Chips Made in America Act or something. And then additionally, NVIDIA has just been on an absolute tear.
Yeah, we're still waiting actually, because like Bitcoin looks like it's going decently parabolic there, but I think like that's not yet the big move, you know?
It's not. It's really not. It will outpace NVIDIA again.
Yeah. Sorry about that, guys. I had a customer. Your boy's over here still trying to make dry powder even while we're streaming, so you'll have to excuse me. But yeah, so one of the reasons why I wanted to put this particular infographic, well, actually it's a live infographic for the folks, is I wanted I wanted hopefully Uncle Peter to see this, because he's the forever gold bull. But I mean, look at the timeline of gold versus Bitcoin versus NVIDIA, right? Like when it comes to tech stock, and you could argue that Bitcoin is technically a tech stock, right? You could think of it that way also, although I'm pretty sure I'm going to get some heat from the Bitcoin maxis for saying that. But it is a technology, right? And you could see just exactly how parabolic, even during the times when Bitcoin lost significant amount of its value, like when it dropped anywhere between like 70 to 90%, it still did better than gold, right? If you held Bitcoin, you still did better than gold, right? And even better if you held NVIDIA over the course of the last year or so, right? Because it's like severely outpaced Bitcoin. But like Nate and Z said, we are just at the precipice of that inflection point when things get extremely parabolic. And over the like, Nvidia is getting like has its time, right? And I think it's going to keep doing well, right? Especially because of its associations, not just with crypto, but with AI, right? So they have they basically have a stronghold, right, on the market share when it comes to the technology that's required to power the Bitcoin miners, and then all of the computing power that you need for powering AI. So Nvidia is going to do well, but I think 2025 in the latter half of this year, I think Bitcoin is going to surprise a lot of people.
You're not
There
wrong.
is-
Although one of the points I want to bring up when we look at something like this is that in the past it was very, or like two or three cycles ago, it was very easy to have that delineation between cryptocurrency, traditional investments, and other things like precious metals and whatnot. But we're moving into an era where a lot of this stuff is actually getting blended together, or it's very interwoven together. I mean, partly the reason why I put my handle on social media as Zenith DI is for digital investment. It was a way to get around getting shadow banned for saying cryptocurrency, but at the same time, I also wanted to speak to the idea that there are many ways to get involved in cryptocurrency and tech collaboratively, almost intermingled, which is that if you want to go through traditional stock market, we now have ETFs for spot Bitcoin and spot Ethereum coming soon, theoretically. And then I bet you once those Ethereums go live and they start making money, people are going to be calling for a Solana one or some sort of merged ETF. On top of that, NVIDIA is a producer of graphics cards. Unfortunately, you know what graphics cards are largely used for sometimes? Crypto mining. That's one way to do it. Even further into the stock market, there are specific Bitcoin mining companies that you can buy stock in. There are even ETFs of Bitcoin mining stocks that you can buy that if you don't want to pick a single one. There's so many ways to get involved in cryptocurrency, and it's becoming more and more integrated in traditional finance. Like, have we been harping on the ETFs for a long time now? Yes, absolutely, but for good reason. But also at the same time, there's more than one flavor when it comes to getting traditional finance into cryptocurrency, or if you're a cryptocurrency person and you want to try to focus a little bit more on your 401k allocation or something, there's lots of ways to kind of smear everything all over the place and get exposure to something, somewhere, some way.
Yeah. And here's the thing, Z. All of these different hedge funds, right? So the attention is the Blackrocks, the Fidelities, they're buying into the ETFs, right? Or they're creating the ETFs. They created the Bitcoin one and Ethereum one. But like Z mentioned, there's a broad spectrum of ways that you could get exposure to when it comes to crypto as a market. Pay attention to what these hedge funds are doing outside of the ETFs. And what you'll notice is they're also buying a significant portion of stock within the largest mining companies, the Bitcoin mining companies out there, right? So they're getting a broad range of exposure to the entire crypto market, not just to the spot markets, but also the things like mining, right? They're probably looking at investing in emerging technologies that will incorporate more of blockchain, the blockchain ledger technology, right? I mean, I guarantee you, they're probably looking at real world assets now too, right?
Bingo.
So when we say to hold on to your bags for dear life, we mean it, because realize that when people get flooded out of the market, they're selling into the hands of these big hedge fund managers. And remember, you don't want this to turn into the traditional finance, right? That's why we went away from it, right? So you don't want these bigger companies getting a hold of too much of the circulating supply of Bitcoin. Okay, so give me 1 second here. There is an infographic that I want to share with you guys. I don't want to scare you, but it just elucidates the speed at which these ETFs have been accumulating Bitcoin. Give me 1 second. Where is my screen here? Give me 1 second, guys.
Good, boss. I'm gonna go ahead and pull down mine.
Here we go. So if I could share my screen here, Mrs. Producer, I'm going to pull it up right now. here is a little infographic on exactly how much the ETFs, all of them, how much Bitcoin they have accumulated since January. Let me know when you guys can see that, and I'll play it for you here.
When you are.
Wonderful.
Music is on. I don't know if you wanted that intentionally or not. Oof. Grayscale had a lead, but that got eaten up quick.
Yep.
This is all this year. It's kind of crazy to think.
Yes, sir. Everything in this year.
Late May was the date, huh? That's when BlackRock took it over. It's
right?
all downhill from
so
here.
look at that number, man. They are close. So in totality, they are close to accumulating about 0.5% of the total supply. Oh, sorry. No. So 10% would be 20. So 2.1 million. So they're almost at 5%, right? In totality, all of the ETFs, they're almost at 5% of the total supply of Bitcoin. That's within not even half a year, guys, right? Those numbers right there should be food for thought, right? And it should solidify what we harp on you guys all the time here on the show, is to not sell into these people's hands, because all of this short-term negative price action, when they're trying to scare you with these sudden drops in price, 2 to 3%. I know, big deal for Bitcoin, right? 2 to 3%. But they're trying to fudge you out of the market so that they could buy at a discount, right? And go ahead, Z.
I was going to say, I ran the numbers. I want you to guess what 3-digit combination or what percentage of the market supply that is. It is 4.20%.
Yeah.
It's a perfect 420.
They did that on purpose,
Really,
man.
Z?
They did that on purpose.
I run the numbers. I don't make them up.
And bro, here's the scary thing. This is considering the entirety of Bitcoin that will ever exist. But remember that they technically probably hold more than what is out there, because people have lost a ton of Bitcoin into the ether because they lost their seed words or they sent it to the wrong address. And so really, probably BlackRock and these other hedge funds probably already hold over 5% of the total supply that will ever be traded, right? So,
well, ever traded, yeah, because like you said, unfortunately, people didn't really know what they were holding back in the early days. So you get all those stories of someone who was like, oh yeah, I had like 10,000 Bitcoin that I mined randomly on a hard drive on a computer I lost 12 years ago. And now I'm scouring my entire house and attic to try to find this old piece of technology that is hopefully still working, just to get at what is probably close to like $7 million or something. And then even to your point, right now, I looked it up on CoinGecko, we're showing that the current Bitcoin circulating supply is 19.7 million. So I ran my numbers off 21 million, which is our max supply, but we're not even at max supply yet. Like, we're still going to be mining well into the 2100s. Mm-hmm. So like, yeah, on top of that, there's dead wallets, dead coins, and there's more to come. So the share that these people have, just from the outset of like that 10,000 foot view looking at it, it's like, yeah, they're starting to eat up a good portion of it. When you consider that they did all of that in 6 months, that's the other crazy part.
Yeah, less than technically. Yeah.
Well, Grayscale's been getting after for a hot minute, but BlackRock is now the big dog. So,
yeah.
Sorry, Grayscale, for everyone that was selling their Bitcoin at $38,000, you lost that one. You really did.
And here is the last thing on the Bitcoin versus gold segment that I wanted to show to folks. So it took Bitcoin about 5 months to cross the 15 billion in total inflows versus the 5 years that it took for gold to do so, right? So I really don't know what it's going to take to bring Uncle Peter over to our side, right? Because he can't be ignorant to this data. Like, I'm pretty sure people are tagging him left and right on these infographics. Like, you can't. There's a I think the loose definition of a trend, right, is if something has stood a test of time for at least 10 years. Well, Bitcoin is about to turn what, 15 years old in 2025. So, I mean, it's no longer a fad, right? I know a lot of people were calling it a fad when it first started out. Nobody really paid attention to it, but it's been around for more than a decade, guys. It's turned from a fad into a trend. And the fact that other countries are creating regulations to support it, the fact that other countries are now creating funds to invest into it, the fact that other countries are making it their reserve currency, like that should say a lot to you, right? It's no longer a fan. It is now a trend, and it's now here to stay.
Yeah, the only thing I can say about what would it take to convince the anti-crypto people at this point is honestly a bit of like a philosophical shift, which is that either there's only a few ways to describe why they've still held on to their convictions, and it's because their mindset and their goals for life are probably different than ours, which is that I think all of us here are trying to aggressively grow our personal investments while we're still in our relative youth. And other people in different stages of their lives might be looking for more stability or something that it has less downside. Because, I mean, at the end of the day, if you buy the top on Bitcoin, guess what? You still bought the top no matter how much it goes up in the future. Right now for you, you still bought that top and you're still eating that loss. Therefore, it's hard to stomach. So if you are an older person and you kind of need your money when you need your money, like the old JG Wentworth, it's like, if you need it now, this might not be the asset class for you. And that's fine. It's just got it's philosophic, it's strategic, it's goal oriented. It's no longer an argument about the technology. It's more about how individual people can utilize it in their own lives and their own strategies.
Well, so a bit of a pushback there. If you need the money
hit me.
now, it's right. It's if you need the money now, it's not like Bitcoin is illiquid. Bitcoin and crypto is, well, let's not say all of crypto, but Bitcoin and Ethereum, right? The ones with the highest market cap, right? The top 10 in market cap, those things are fairly liquid. So anybody can invest into Bitcoin or Ethereum, and they can trade it. If they need the money now, they can trade out of it into fiat and cash out, right? So it's fairly liquid. Although I will say that age certainly has a lot to do with how you invest into this ecosystem, right? But honestly, where else are you going to put your money into? Like, where else? Where else are you going to put your money? Because if you're an investor, you probably have some modicum of like financial acumen, right? You know the concept of inflation. Where are you going to put your money where inflation is not going to eat away at your returns?
Stocks, that's really the only thing you can do, either that or real estate. But I mean, come
gonna say
on,
real estate,
financial
yeah.
advice. Go buy bonds, everybody. Bonds are how you're going to make lots of money. There you go.
There you go. We have two very different financial advice things, and we have different people on the panel. So Nate is saying buy bonds, and if Will was here, he'd tell you to go rob a bank. So,
I mean, it's true. You technically, the thing that I was kind of looking at is like, if you're older, you're looking for more stable money, right? And that's ultimately what you're talking about, Z, is you want more stability. Yeah. And so, like, yeah, if you're going to be throwing yourself or throwing your funds or whatever into Bitcoin or Ethereum or whatever, very volatile. It's going up and down, and that's just not something that these weak hearts of of the elderly can take. So
give themselves a heart attack.
I mean, look, as much as we want to dunk on the boomers, and believe me, I want to so much, it's not even that their little hearts and their pacemakers can't take it. It's that, like, just mathematically speaking, if you are someone in retirement and your portfolio, like if you rode the crypto wave down, that is the difference between like having a normal retiree life versus being almost destitute. It is massive. That's why those people really need that stability, and they need things that are reliable and countable, and they need things that are not going to have all of their gains get wiped out with just like 3 or 4 bad years, because unfortunately, I mean, it's kind of by design, but that side of the market, the growth rates are very slow and steady, but the downsides are also still somewhat it's very easy to wipe out 2 to 3 good years with 1 or 2 bad years. I know the example I've been given for the past bit is that if you got into the stock market at the beginning of 2022, you are just barely in the green as of this year. It has been down since then. So if you're trying to live off that money, just think about it from that standpoint. That's even stocks. So if you want to think about it from a crypto standpoint, yeah, it's kind of the difference between a have and then 6 months later you are now a have not.
Yeah. But here's the thing, bro. It's like unless you're putting in 6-7 figures into these indexes, the dividends are paying you pennies, bro. Like if you got a 4-figure sum in the S&P 500, even during the bull market, what the fuck is that going to give you? It's going to give you nothing. It's going to give you zero gains, basically zero gains, right? If you have even if you have a small 5-figure sum in the S&P 500 and you manage to catch like a 30-40% pump, right? Like what are you going to do, man? You're going to wipe your ass with $4,000 extra off a $10,000 portfolio? Like you're not going to be like, especially if you're young, bro. Like I have so many friends that I try to give them the value proposition of crypto, right? I don't try to force it on them because the older I get, the more I realize that people are going to have to come to that decision to themselves, right? You can lead a horse to water, you can't make it drink, right? You could give somebody the best performing asset of all time, but it's going to the impetus is going to have to be on them in order to invest it. In order to invest into it. I have so many young friends and acquaintances, bro, that they're debt free. They got zero debt, right? Which is the best place to be at. They're either in university, they got a scholarship, or they were like, you know what, fuck university, I'm just gonna go straight into the workforce. So they got zero debt, right? So you got youth on your side, you've got time on your side. So you could take risks, bro. Like you could take risks, and even if you fall flat on your face, you have your youth and you have time on your side, right? And you just happen to exist in this time, right? Where crypto, like we are now at the final frontier of finance, right? You exist in a time that crypto also simultaneously exists, right? It's the best performing asset of all time, and nothing else is going to come close, right? And so like I'm trying to do my damn best, like doing a public service, trying to get these fucking and most almost all of them are dudes, right? I'm like, bro, get the fuck off of your ass, stop playing video games, right? And you're already on the internet 24/7. Go to YouTube, learn about it, right? And it's like I'm telling you, like, yo, use me as a resource, bro. Like join our Telegram chat, right? There's so much money to be made in this space. And it's not going to exist in the traditional vehicles that people are used to seeing, right? You can't just put your money in the bank. You can't put it in the S&P 500, right? Like, and unless you have a significant amount of capital, right? You're not going to be able to put that shit in real estate, right? Especially if you're young. Who's going to give you a loan to buy a house? If you're 20 years old, you got no credit history, right? Like, the barrier to entry is so high.
No, absolutely. Like I've had several talks, and I have had some friends who have actually listened, right? But the majority of those who just don't listen or like, yeah, I'll think about it, I'll get into it later. It's like the time is now, right? The power of now, right here, going by right now. I don't know, like even though like Bitcoin it has gone way up, right? Compared to like where we were buying, it's still a good time to buy right now for a lot of these tokens. So it's like, or coins, but like, I don't know, man. So it's not until people are suffering that they will change what it is that they're doing,
To give go for it. Sorry.
I was just going to finish off that thought by simply saying, it's not until people are suffering that they're going to buy in. Right. And so that's going to come when, say, the dollar dies or something really bad happens, or they're now in debt, or something's really bad in their life, and this now becomes a way for them to get out. That's the majority of people.
Oh, for sure. The pain point is honestly that meter that will move a person from inaction to action. But to give some pushback to the idea here, which is like, why isn't everyone just doing everything we say? We're clearly so right. It's kind of like one of those old Richard Hart isms, which is that you shouldn't get used to listening to people like me because that will get you scammed. Except in this instance, you actually should listen to me, because at that point, it's the those people would have gotten sucked into sports gambling, some sort of like multi-level marketing thing, investing in a club in Havana and then getting scammed out of that. Or you could just go straight up richest man in Babylon in style and lose a rigged horse race. It's there. Unfortunately, there's so many people that are in the world trying to make their own, and a lot of it is either not great or dishonest. So that when stuff like this comes along, and you do end up with those cryptos numbers that we were talking about, like literally within this hour, we were talking about how Bitcoin, which has been around for almost 15 years now, realistically can do a 24x, not a 24% gain, a 24x within the decade. It's like, yeah, that kind of number applies to things that have been scams, high risk, high volatility, or just pure chance or almost illegal activity. Yeah. So are we trying to scream from the high heavens and save as many people as we possibly can? You bet. That is why we're here. That is why we're going to keep doing this, because we want to save as many people as possible. But I mean, this is a bit of a personal philosophy here on this one, which is like, look, I'm going to drop breadcrumbs, and the people that want it and are hungry, they're going to ask, be like, hey, what was that? It was like, you invested in token at 2x in a week? Huh? Explain that. Like, tell me how that's not ridiculous. Yeah. Like, those people will figure it up and ask. And at the end of the day, it kind of is that meme where it's like, look, if I won the lottery, I wouldn't tell anybody. But when I start getting a second piece of chashu in my ramen, like, there will be signs.
Yo.
Just saying.
What the hell? My favorite topping for ramen, since we're on that topic already, is I love
marinated
pork belly.
Egg. Marinated egg OP.
Dude. Man, the brown egg on ramen, bro, that soft-boiled egg is fantastic. But I'm a pork belly guy, bro. Like,
I like
if they do the pork belly right, like, that thing just melts in your mouth, man. I like it better than the chashu for sure.
Yeah, but here's the great debate.
More expensive than the chashu.
Here's the great debate, though. Corn or no corn? I'm no corn.
In ramen? No corn.
No corn.
No corn.
Okay. Whenever I see people get corn in the ramen, I'm like, ugh.
Bro, unless we're talking top ramen here, right? Like, you're in college, you're broke as a joke, you ain't got no damn money, right? All you can afford is top ramen. Top ramen likes to put corn in their fucking, like, the ramen inside the styros. Right, but if you're even if you're like at a low end ramen shop, bro, they're not gonna put corn in your ramen, bro.
Damn straight, damn straight. That's what I like.
An honorable Japanese person is not going to put not going to put corn in their ramen. Okay, that's blasphemy.
True. All right, before we get too off topic, we got a few more tweets or X's. What do we call them? Zeets.
I
don't know. That's what we got.
That sounds gross.
It does a little bit. Mrs. Producer, can you please pull up my screen share? Because we were talking about college a little bit earlier. The Texas institution, the University of Austin, announces it will accept Bitcoin for tuition and create a Bitcoin long-term fund. Yes. By the way, if you were asking if this is some random no-name school, no, this is a school with over 50,000 students. This is one of the largest schools in Texas, which kind of just de facto makes it one of the larger schools in the nation. Mm-hmm. And now they're looking to build up a Bitcoin fund, and they are looking to accept it. So first it was Tesla, then they moved to Texas, and now Texas is accepting Bitcoin. Coincidence? I think not.
No, sir. Not at all.
I kid on that part, which is that Elon is not specifically involved in this, but people are wisening up.
Well, I think it's the
Bitcoin. Yeah, go for it.
Go ahead, Nate.
It's definitely the culture in Texas, because it's the Republican types, Those people, they want to get out of government and things like that, so they're more open to things like Bitcoin,
You say that, but this is Austin, which is the San Francisco of Texas, effectively.
Yeah. They do say that Austin is the blueberry in it's the blueberry in the red state.
That it is. Mm-hmm. Still a cool place, though. Shout out to Kool-Aid. He lives somewhere in Texas.
And so on this particular one, so there's an article that we're going to go over in a little bit that actually ties into this one, right? So there's a lot of things going on in Texas, but realize that it's not just Texas where Bitcoin adoption is taking place. If I could share my screen here really quickly, Z, before we go over the article. This is Mike Novogratz. He is the CEO of Galaxy. And they are a Bitcoin investment fund, right? They're a hedge fund, in particular, focusing on the cryptocurrency space. This was him. I think this was on. I don't know where was this? Oh, this was on Bloomberg. So this was on Bloomberg Crypto. Let me go ahead and share my screen here. And he spoke about the state of Wisconsin adopting buying into Bitcoin. Give me 1 second. Here we go.
That makes
It's
sense.
a small video clip, so let's go ahead and play it for you guys right here.
Let's just start with the simple things. Let's start with Bitcoin in the crypto world, because we're flirting with that $70,000 level. And you sit here, we have been around this space for a while now. Is there more upside risk or downside risk as you see it now in the crypto world?
Listen, I think we're getting skewed to the upside. I mean, just the fact that we're here at a crypto show and Bloomberg shows how long we've come since 2015, 16, 17. But we kind of got to the finish line. And when I say that, DC has finally agreed in principle that crypto legislation has to happen, that it should be bipartisan. We still have a couple holdouts, but the last few weeks have been unbelievably positive in pushing the Democrats forward, seeing this. They don't want it to be a political issue. And so that which was a headwind is becoming a tailwind. It's not a full tailwind yet. We have governments that can't stop spending money. And so that just is so powerful for the Bitcoin narrative. And then all of a sudden you hear, wait a minute, the state of Wisconsin's pension fund bought $140 million of Bitcoin. And so as we get more pension funds in, more institutions in, there's not a lot of sellers.
So the question we know you hate then, where do we end the year?
Listen, if we take out the 73,000 in the next week or so, we're going to end the year at 100,000, somewhere around there or even higher.
Ending at 100,000. How about that?
Seems like familiar numbers, right? But what did you guys think, right? This is like I said, Mike Novogratz. If you guys didn't have an opportunity to catch his keynote speech at Consensus last week, it was a fantastic speech. So go ahead and check that out if you haven't already done so. But what do you guys think about this particular input by Novogratz here, right? About Wisconsin, the pension funds buying into crypto.
You know why they're doing it, right? Because number go up, the dollar to go down.
Correct.
That's what they're
Big
doing right
facts.
now. Although it is Wisconsin, so I was born in Wisconsin, and that's my state, right? So I know probably better than anybody else here that the only reason why Wisconsinites do anything is because they got drunk one night and then stayed drunk and made the laws.
Nate, if you were going to do something while you were drunk, there's a lot worse things you can do than buy Bitcoin with the pension fund. Okay, there's a lot worse things that we can do while we're drunk.
See, we Wisconsinites, we are so used to being drunk that we actually start doing good things while drunk.
Mm-hmm. Yeah, Z, how about you, man? What do you think about this particular piece of news about Wisconsin pension funds buying into Bitcoin?
You remember when I just went on that spiel previously about how old people need stability in their retirement savings? I'm not saying I'm foreseeing a problem in the future, but they might have some volatility in their future, and I don't know if they're looking forward to that.
Yeah.
At the same time, though, I think Nate hit this one square on the head, which was that I think people have become disenfranchised with the US dollar, largely due to inflation in the last 5-6 years. And now they're willing to act on it. And whether or not these are very active people that understand crypto and understand the 4-year cycle and everything that goes on with it, and the possibility for either a 16 or 20-year macro cycle, which means that we could be getting a rather large bear run, either this next upcoming cycle or the one after that. I really hope that economists that work for the government, which I know is a low bar to begin with, but I hope that they understand what they're doing here, and that they have a plan to make sure that this is sustainable. Because if you try to yeet the entire bag of retirees into Bitcoin, you're going to have a bad time.
Yeah. Yeah, but I think giving them especially if that pension, if the money, here's what I'm kind of envisioning, right? I think that conversation is going to have to happen when you have that discussion with somebody who's a little bit older and you're asking them to invest into Bitcoin, right? I think there's going to be something along the lines of, look, we all know that you're a bit old, right? And you might die before you see the realized gains from this investment. But how about we make it so that whatever investment that you're putting into this asset class, right, can go like as part of your will, go to your loved ones, like maybe your grandchildren, right? Your spouse, your loved ones, right? I think that conversation, if that conversation happens with people who are a little bit older, who are a bit closer to knocking on death's door, right? Like I'm not trying to be, like I'm not trying to be malicious here. I'm just kind of stating the facts. But if you have that conversation with them, and you give them the proper, like, the value proposition of, like, even if it's just Bitcoin and Ethereum, I think that's going to open them up a little bit more to investing in this asset, right? Because somebody who's older, they've been around the block a few times. And they probably would have seen to what degree on multiple occasions how irresponsible the federal government is when it comes to fiscal and monetary policy, right? They're irresponsible with it, unfortunately. And they're never going to become responsible with it. And so those people who are a little bit older have seen that, right? And then you tell them, look, this is the final frontier of finance. This is decentralized, right? They can't control it. They can't print it out of thin air. And so if you invest in this asset class, even if it's like 2 to 3% of your total, like, net worth, right? You're going to have a small portion of this reserved for your loved ones, right, in the future, that the governments are not going to be able to fuck with. So I think if you have that conversation with people who are a little bit older, who are investing into these Bitcoin pension funds, then I think they become a lot more open to it.
I think we're going to hit a point where I think we're just going to hit a point, and this is sort of like the early stages right now, but we're going to hit this point where people are going to be looking to accumulate more Bitcoin, even oldies, right? Because because even in a bear market, the olds, right? Because even in a bear market, they're going to be looking at it going like, okay, but it's still doing better than the dollar.
Yeah. And that's what matters, right? If I know we have a saying that if your altcoin is not outpacing Bitcoin, then you probably shouldn't be invested in it. But there's one level above that, right? If your asset class is not outpacing the inflation of the US dollar, then you should probably not be in that asset class.
Yikes.
That is what I call a bad investment.
Yes, that's what you call bonds. A bad investment.
Looking at you, bonds.
Isn't it bonds like 1% or 5%?
I think 5. Is like it US 5? Treasury bonds?
Yeah, it's 5 at the top end.
Yeah.
Oh my God. How do you even deal with that then? Because it's like 8% inflation per year for the dollar, right?
Well, the issue is that you try to believe that government bonds are safe and not risky, so you put a ton of your business into it, and then you close your doors and you realize that your name is Signature Bank. That's how that plays out. I mean, I'd call it shots across the bow, but they're 6 feet under at this point, so that's just the way it goes. Alrighty, boys. What else are we talking about tonight for Twitter? We have one more that is officially on the docket, and then I do actually have a tweet from a friend of the channel, Rags to Riches, who points out a chart that I've been trying to track myself a bit.
So I wonder if we should do chat shout-outs before we move on to that.
Yes, we should.
Yeah, let's go for it.
Yeah.
Absolutely. That is the entire correct thing to do. So, Mrs. Producer, if you do not mind, we have some people we want to shout out. First up, we got Kawal Singh. He says, here for the support. Glad to have you. I apologize if I butchered your name. I'm known to do that. Up next, we got Ray. Not Ray, but just Ray. He says, time for that DGen Alpha. Do your own research. PulseX, Incentive Token, Mojo, Phantom. The only one I don't know is Mojo. So
I know Mojo Jojo.
Oh, that's a fucking reference right there. We'll have to look into it. Alrighty, up next, good buddy of the channel and book club member, we have Farmer J, aka Brown310. He says, I don't have any crypto, just useless, worthless digital assets, Mr. Government. Exactly. I would just like to say that I lost my private keys in a boating accident in San Francisco Bay. So go find them in there. Alrighty, up next we got Moonmut. He says, hello to all my DGen Hexagon friends. Good sir, hello to you. But I don't know if the Hexagons are DGens. Are the Hexagons DGens? Are they known to do that?
I think so.
I thought everyone staked everything Quattro Cinco and just called it a day.
Oh, speaking of, I actually have a stake ending within the next few days here. So we'll see what let's see what gas looks like in a few days. Imagine the market starts running on the FOMC and CPI news, and I'm like, oh shit, I can't unstake my Ethereum side. I'll just have to unstake my Pulse chain side.
Oh gosh, no, don't say that. It would be very bad. Well,
I mean, I think
wonder,
anything down the risk curve, bro. I mean, I think even Bitcoiners are degenerates, bro. Like
when you
when you engage in an asset class that, like, at least for now, right, can drop anywhere between 60 to 75%, right, during the bear market, like that's degenerate, bro.
Absolutely.
Yeah, it really is. Although,
but then that's when we're buying more though too. So what the fuck is wrong with us? We're mentally not up here, are we?
Look, man, it's just called a DCA. We just keep throwing money. Just if you keep throwing money, it's a strategy. It's not degenning.
Indeed.
Alrighty, up next we got Colonel Giggles. Howdy, y'all. Howdy, Colonel Giggles. Good to see you. We have a good friend of the channel and part of the community, Large. He says, like the smash button, degens. Absolutely, like the smash button. Large is the one saying it tonight because Will is not here. We hope Will is having fun gallivanting in the woods with his buddies instead of, I don't know, like sitting on stream talking with these guys about robbing banks and whatever he'd normally say.
I think Will is actually on some kind of boat, so hopefully he's not too inebriated, man, because we definitely don't want him to be in a boating accident where he loses his private keys.
Yeah, that's a terrible thing. Terrible thing, losing your private keys in a boating accident. Like,
I got hit on the head. I lost my keys now. I can't remember.
Exactly. Like who would intentionally go and lose their private keys in a boating accident? That just sounds horrific. What? Alrighty, last but not least, we have the Bull. He says, sup, legends. Sup, Bull. We've been waiting for you for 3 long years, and we're starting to see you show up these days, so we appreciate that you're here for us. Although, we also count that you're not going to be around forever, and that all I'm saying is that 2026, 2027 might not be the greatest crypto years. There will be a lot fewer Lambos. That is my prediction.
Man, I'm not going to be buying a Lambo. What I am going to be buying, if I am going to make another investment into a vehicle, I'm probably going to buy myself another truck, bro. Well, I'm going to get something practical.
Get yourself a Jeep.
I mean, I'll put a little...
Yes. It's either going to be a Wrangler, a Gladiator, a Bronco, or a 4Runner. Like one of those. One of those. Yeah.
I love all those options, although I'm also a bit of a car enthusiast myself, and I know that if you want to get one of the newest generations of any of those, you are going to be paying out the nose for it. And it's such a damn shame because, like, dude, like an old late 90s 4Runner was just like the pinnacle of reliability.
Yeah.
Hard to beat.
Buying a new 4Runner now, sports car. R83.
Yeah, I'm not a sports car. I know how to drive stick, but I'm like, once you get inside a truck, bro, it's like you can't go back. Like, you can't go back. I feel so safe. Like, aside from the practicalities and the fact that it helps me with my business, right? Like, I just feel safe inside a truck, bro.
You're right, yeah, because you're a lot higher. Not only that, I have felt that before too, where it's like you start going over like potholes and shit, and you're like, it's fine. Versus a car, you're like, oh shit, did I break something?
Yeah.
You guys are spitting pure facts right now, because this is pretty much describing the last 4 or 5 months of my life, which is I used to have a truck, I got in a car accident, and then it got totaled, and then I got the payout from the insurance company, and then my brain was like, look, we can either go buy a truck again, or we use some of this money and we degen and we shove it right in the market.
Yeah.
So now
well, I mean, you don't gotta buy new, bro. You don't gotta buy new. Like I bought my Tacoma. Like I bought the 2nd gen Tacoma, and like you were mentioning, right? Not only is the price tag in the newer models a lot way. I mean, Tacomas retain their value really well anyway, but like the maintenance on those things are going to be a lot more difficult. I can DIY most of the maintenance, like the basic shit on my own Tacoma. Right, because it's the 2nd gen, because it's a lot easier, right? I just changed out the resistor, right? Because the AC went out, so it cost me $17 to grab that resistor. It's right underneath my glove box. I changed it out. Would have cost me like a few $100s taking it to the shop, right? All the fluids, like the power steering, brake fluid, like all that stuff, like that's like easy maintenance, bro.
Yeah, you absolutely want to buy secondhand. Absolutely.
Yeah.
Oh, for sure. But Jay, just to highlight how crazy the last like 5 years was. You remember you just said the quip about we don't buy new cars, because I think all of us here know that cars are what kind of an asset? a
Depreciating, baby.
interesting. I bought my truck back in March of 2020 for about $24,000. After putting 35,000 miles on it, the insurance company paid me out $29,500.
Well, I mean, it's
Is that
a truck, bro.
Did that depreciate?
Nope. Because it's, bro, dude. Oh, true story.
Wild.
A few months ago, right? I was picking up some food. There's this place called Maui Hawaiian Grill that's close to us, one of the best Hawaiian spots here in Arizona, or in Tempe at least, right? And I was waiting in the parking lot. This dude straight up came up to me like, "Yo, if you come with me to the bank right now, I'll give you 20 grand for your Tacoma." I was like, I paid $9,000 for my Tacoma, bro. Like, you want to give me 20 grand? But I was like,
Oh, hell yeah.
nah, sorry,
Take
bro.
that
Like,
deal.
bro, like, this is how I run my business. This is my baby. I'm not gonna sell it even for 20 grand, bro. So, like, I passed on it, but like those things, man, they retain their value.
Yes, 1,000%. But also the car market over the last like 5 years has been absolutely just jacked, especially because when all of the Android stuff was going on, a large part of it was honestly just the chip shortage. Because we had a chip shortage, it means new stuff wasn't being produced, which means that the older stuff maintained value and went up, and we had inflation. And there's just been a bunch of demand for a lot of the newer models that have been coming out. Like, good luck trying to buy a new Bronco for MSRP. Like, there is like at minimum a $10,000 to $15,000 markup.
Yeah, there's a premium. There's a premium on the Broncos, man.
It's everything. I remember back in the day, it was like 2019, I think, that Chevy announced that the new C8 Corvette, they wanted to sell the base model for $60,000. It's like, good luck finding that for $60,000. Good luck. It's damn near impossible.
Speaking of a chip shortage, so what's going on right now with China and Taiwan, you think we're going to be seeing further chip shortages, making things skyrocket?
It's entirely possible. I'll say that much, because what is it? It's some stupid number. Like, Taiwan produces something like 90% of all the world's semiconductors, which is preposterous to think about. So the fact that they're having all their stuff going on with China, trying to do a blockade military practice operation, is like, real subtle there. I wonder what's the future possibly. So you're entirely correct, which is that should stuff pop off over in the East China Sea or whatever, or South China Sea, excuse me, the price of semiconductors could be going up again. And again, even with all the stuff we've seen previously, just like a singular canal getting blocked up like the Suez, that can have massive, massive effects that ripple throughout the rest of the economy, especially when we have complex production lines like we do right now. Yeah, chips, it's going to be a big one coming up in the future.
Yeah, and that's gonna rise electronics, tech, cars, just things in general, right? So what I think is, and kind of like how Large says here, I think if Trump does get elected, that's going to help a lot. It's going to back China off, at least for the next 4 years. After that, maybe they actually make their move. But I do believe that China is not going to be is not going to make their move unless we have a weak ass president in the office, and Biden is definitely weak.
Yeah, look, not to get like too political on this one, but even though I largely agree with you, which is that even if you want to put the election aside, or whether or not you believe so-and-so has a better foreign policy, if you just go on the pattern of how many countries have been invaded, how many conflicts or wars have been started, and how just the mass level of unrest in the world, it's unfortunately showing a trend, which is that there was a lot of stability under Trump. There's not as much under Biden, which means that even like the election in November aside, if China is going to move on Taiwan, they really have like 4 months to do so. And even then, I'm going to have to make sure I get this right, but I'm pretty sure typhoon season over in that part of the world is coming up. So trying to do an amphibious assault across hundreds of miles of open water, that's hard to do for any country. Like, it's the reason why the United States is trying to develop a replacement for the F-22, specifically with a combat radius that's able to launch from a U.S.-friendly base in the Pacific to be able to defend Taiwan. Like, this is a legitimate thing that people are focusing on. So that's what we got. All right, Nate, what are we talking about next? We want to hit the exchange. I hear there's an exchange proposal.
Yeah, there's some kind of yeah. Speaking of Texas, looking into Bitcoin and liking all that stuff. What else is going on over there?
For sure, Mrs. Producer, if you do not mind, thank you very much. The name that has been on the tip of our tongues for the last 2 years, effectively. BlackRock. BlackRock and Citadel securities-backed Texas Stock Exchange Group to launch the Texas Stock Exchange. That is a redundant headline if you read out the acronym like I just did. Anyways, the point here is that the TXSE, or the Texas Stock Exchange Group, backed by BlackRock and Citadel Securities, plans to launch a new stock exchange in Dallas, Texas. So we were talking about this earlier, which is that, Nate, is this a new idea? Has anyone ever tried doing something like this previously?
No, it's absolutely new. Philadelphia, Chicago, Boston. They never tried to do that before or anything. It's not exactly a new idea. Yeah, the problem we're going to run into here with this is that it is very difficult to beat out the New York Stock Exchange. That's been around for what, like 100, 120 years or whatever. So, I mean, to try and beat it, like, it is competition. Okay, that's the deal. I've got another theory on this, and I think this can actually work. So are you ready for this one?
Let's hear it.
All right. So we've got a little bit of a separation in America currently. There seems to be blue and red, right? Republican and Democrat. Well, what other than California, what other state is so extremely blue? It's kind of ridiculous.
Either Oregon or Washington, I'd argue.
No, New York.
Yep, I don't know how I missed that one. You are correct.
So New York Stock Exchange, right? Okay, what's going on in Texas now? Texas is kind of being known at this point for being the Republican state. You know what I mean? It's like, okay.
Oh, that was Florida.
It's been turning into Florida at this point, but it's always classically been like Texas,
You are correct. You are very correct.
And so what I'm seeing here is I'm starting to see the split, not only politically, right, but also financially now in the United States of America. And that kind of seems like maybe what's going on here. Maybe that's a little bit, too big brained or whatever to think about, too wizard like.
No. I think you're spot on the money. These are, it's obviously not the dominant trend that we've seen in the United States lately, but it's absolutely a large trend that we've seen, especially when it comes to what I'll call the bifurcation of the economy, which is that there have been a lot of people who are worried about getting like debanked or just refusing to do business with certain people purely based on political standing, or even whatever part of the country they're in because of perceived political standing of that state in and of itself. So the idea that you would try to start a rival economic center or like a rival stock exchange to a different one, it makes complete sense. But like we talked about here, they've tried this before in many areas, but the issue, or many places, excuse me, not same area, same stocks. But when you look at this article from Reuters, it seems like really the crux of the issue is that they're unable to have a competitive advantage when it comes to any sort of fees associated with the listings. And then the big one is that they just don't do the volume, which is that you have to drive actual commerce over there. You can't just be an alternative. You actually have to have flow, like throughput and actual flow going through. It's very possible that this could work, especially considering, in my opinion, you got BlackRock and Citadel. These are honestly like some of the absolute largest names in the financial space. So if they're willing to back a project like this, it means that there's probably a good reason for it. And at least on paper to them, the numbers that they're seeing makes sense. And the appeal also makes sense to them. I will point out, I know we just gave all those examples of the failed stock exchanges. However, it is absolutely possible to create other successful exchanges because someone please correct me if I'm wrong here, but the commodities trading exchange is in Chicago. So it's possible it's either Chicago or Detroit. I'm pretty sure it's Chicago though. But the point is that, thank you. The point is that it's possible to have other exchanges. If you want to do a stock exchange, understand New York is the primary competition. That's going to be the hurdle to get over.
Yeah. So here's the cool thing that I was looking at, right? Is like, if you have BlackRock backing you, it's basically, that's your best bet to actually succeed, right? The interesting thing is that in this article, if you actually read kind of down to the bottom, it says that conservative states that restricted their public pension funds from doing business with BlackRock and other Wall Street firms, right? So I kind of see here that BlackRock is trying to kind of get that market back, so to say. You know, they're trying to sort of save face and look like the good guys again.
So what caught my interest with this particular article is they make the argument that one of the reasons why a lot of the times when other stock exchanges have started to pop up, right? Because the New York Stock Exchange, right, and the Nasdaq have such a large market share of that total trading volume that occurs like worldwide, right, and here in like domestically within the US, a lot of other ones that have tried have failed. But the caveat here is that you have BlackRock coming in, trying to establish themselves in Texas in particular, right? Which I found interesting. Why in Texas? Well, it seems like out of all of the other states here in the U.S., Texas is going to be one where favorable regulation towards crypto companies are going to be established, right? And so it's pretty telegraphed. At least this is what I think personally, that BlackRock is telegraphing what their move is going to be, right? Because I'm going to assume that they're going to try to bring in a lot more spot ETFs somewhere down along the line once we have a much we have regulatory clarity within the space, right? And we actually have a framework to support it, right? And so why otherwise would they put this particular exchange in Texas, right?
Well,
So
the other
that's
thing
my-
about Texas, though, too, Jay, is that they at one point were the 12th largest economy in the world, and
Yep.
they've actually moved up to number 8. So
Yeah.
there's been a lot of growth over there. Now,
Yeah.
BlackRock wants to capitalize on this growth, obviously, you know. So if you're adding in capitalize on the growth, also you add in the war between, you know, Republican or right and left, you know, Republican and Democrat. Okay, and then you also add in that Republicans, these red states, are also kind of crypto friendly, adding on to exactly what you said there with like the more spot ETFs, right? Like this is kind of a perfect storm for them where they're like, we can't not do this. This is how we are going to fund a lot of shit later on.
Yeah, it wouldn't really make sense to me if they didn't at least try it, right? Because why not try to accumulate more of that market share, right? For me, if I was in their position, that's how my frame of thinking would be. Right? I remember we spoke a little bit earlier, Nate, in the episode about how BlackRock and these other hedge funds are not just limiting their exposure to crypto to the ETFs, right? They're buying stock into mining companies. They're looking at the tokenization of real world assets, right? And so this kind of, I believe, falls in line with that frame of thinking, right? Where they're going to try and get exposure to crypto and other markets, right? And so if they're going to establish another large traditional exchange that's going to have a lot of the crypto specific ETFs included in it, right? Because it's probably going to be a lot more difficult to get something like the Nasdaq or the NYSE to adopt those things, right? They're like, well, why not just make our own? And so it's going to be easier for us to approve what comes in and what doesn't, right? And as long as we get the thumbs up from the SEC or the CFTC, or we get the thumbs up from our regulators because they create this regulatory framework, then we can decide which ETFs we want to create and put it in our own. We don't have to ask permission for anybody else.
Absolutely. Right? Absolutely. The number one thing that they've been trying to do for the past like year and a half now has been real world assets. It's the reason why it's a narrative in crypto right now is because of that. The tokenization of the world. Larry Fink literally said that. And the tokenization of just things like, say, real estate allows a huge amount of retailers the ability to start purchasing things. And that right there is how they're, you know, through this right here, as you say, Jay, this is how they are going to be able to keep things liquid, keep moving things around. It's an entire economy itself that they're trying to build, you know?
Yeah. Right. If you own, like, if you're a part owner of the stock exchange, who do you have to ask permission for? Like, hey, NYSE, can you list our ticker? Or NASDAQ, can you list our ticker? Right. Like, you're not going to have to ask permission from anybody. So as long as they have the framework in place and they have the approval from our regulators, then you've now just taken out a barrier of entry for the things that you want to, like, the things that you want to list, the things that you want to promote.
Very true. All right, gentlemen, have we beat this one up enough?
There is another thing. I told you folks in the beginning. There's a lot of different things that I want to tie into it. So
yeah,
this one was. Oh, actually, I think this was from the New York Stock Exchange. Hold up, give me 1 second. Give me.
You want your screen share?
Yes. Oh my goodness. Speaking of the NYSE. So yes, please. I'm going to go. My English is so bad right now. Please forgive me. I'm gonna if I talk too fast, right? If the information in my brain is processing too fast and it's trying to come out of my mouth, but my talking speed can't match it, the fob comes out. I get all jumbled. But here we go. So this particular clip, this was also from Consensus. So the NYSC was at Consensus, and they revealed. I'm not gonna spoil it. I'm just gonna let you guys watch it. Speaking of more crypto in the traditional market,
we're working towards getting regulatory approval to launch options on CoinDesk's Bitcoin index, the leading Bitcoin index in the market. So we're incredibly excited about it.
I can tell there's some of our colleagues. Some of our colleagues must be in the audience. Yeah, we're really excited about it. We have great colleagues at the CoinDesk index business, and they're always cooking up new ideas for products, and Lynn's always cooking up new ideas for products.
Holy crap, her nose. She's like a witch.
The wicked witch of the NYSE.
As far as accosting noses goes, that one's not bad. Is it a nose? Yeah, it's one that you'll remember 2 days later, but it's not the worst I've seen.
Mm-hmm.
Oh boy. Here we
Right?
go. Bitcoin ETF options.
Right.
So I got two thoughts on this one.
So
no, sorry, Jay,
more
go for it.
More specifically, Z, this is options trading on the CoinDesk index, right? So like with other indexes, it's a basket of particular crypto assets that CoinDesk has accumulated that they recommend people invest in, right? So it's for that particular index. So go ahead, Z.
I was going to say, if we've looked at this one previously, I'm pretty sure this index has, I want to say like Dogecoin is their number, like 4th or 5th coin. 3%, oh, excuse me, 4% Dogecoin, 3% Shiba Inu.
You want to share the screen, Z, so people can have an idea of what the index looks like?
Hey,
Yeah,
Zenith,
sure.
you know what they've been saying? What's the next ETF going to be? People are legitimately thinking it's going to be Doge rather than like even Solana.
There we go.
That's an actual narrative.
A basket of 20.
Just
a basket of 20.
Yeah, just the fact that we're at this point in the world is kind of wild.
It's a fun time to be alive, guys. Come on.
That it is. All right, I zoomed in a little bit. So Bitcoin 34%, Ethereum 23%, Solana 13%, XRP 5%, Dogecoin 4%. Those are their number 5 token in their holdings. Dogecoin.
Yep.
Tied for number 6 is also Shiba Inu. So
Oh god. We've got Solana, XRP.
Yeah.
Those two make sense.
we got Uniswap. Okay, that's not bad. We got
Doge.
Polygon. We
See,
got
like Polygon,
Cosmos.
even Uniswap makes sense, but freaking Doge,
Yeah.
Shib. God.
Look, if I was to evaluate this index, right, this is probably like one of the safer indexes you can invest into, right? I see Chainlink,
sure.
Chainlink is gonna be big, right? You got Polkadot, right? So you have like infrastructure plays there. You got a few exchange plays in Uniswap. You got Polygon layer 2s. You got Near. You got, what is this? Is that Lido? Do I see Lido down there?
Yeah, Cosmos, Litecoin, Internet
Oh,
Computer.
Litecoin. Blech.
Yeah, I don't know about that one, but
Filecoin, yes. Like decentralized storages, guys. Bro, did you guys hear what happened with Adobe? They updated their privacy. Right? They're like they like, we can now retroactively invade your privacy at our discretion.
that's kind of
So
wild.
stuff like Filecoin, bro.
Patriot Act.
Mm-hmm.
So
Yeah.
just for reference, this portfolio right here, this is 34% Bitcoin, 23% Ethereum, 13% Solana. Right there, that already makes up 70% of your holdings. After that, everything is less than 5%. So at the surface, this is a pretty safe or conservative index, like Jay was talking about, because I mean, a lot of the stuff that we talked about, if you're watching us, chances are you went through the crypto mindset course. One of the things that the boys teach in there is that realistically, no more than like 50 or at most 50% of your portfolio should be either ETH or Bitcoin, preferably Ethereum, because it's that safer play. If you have 34% Bitcoin, this is a very safe portfolio. And to stack 23% Ethereum on top of that, yeah, there's a lot of stability here. So,
bro,
as far as indexes go for it.
The only thing I would have to say, I saw Filecoin, bro, but Bitcoin Cash, really?
Ethereum Classic, really?
Yeah, I don't know about
really,
that.
bro? Come on, man. CoinDesk, you could do better, bro. Do better,
Dude,
bro.
Yeah.
People will trade anything. They will trade anything. I guarantee you, both of those coins will run this bull market, and at some point, they will outpace Ethereum and Bitcoin. But overall total gains, probably not. But I'm saying there will be a moment, maybe like a week.
Litecoin and Bitcoin Cash, bro. I'm dead.
I hear you.
Yeah, I want to point out one on there that is not talked about too much. It's Internet Computer.
ICP, also a good one, right? All these things, they're in top 50. I believe they're all within top 50.
Yeah, so ICP is an interesting one because it reminds me. Reminds me a little bit of Sui, right? Sui, and the other one was at the time was Solana, where there's a lot of institutional backing on it, but yet, like say with Internet Computer, it's actually newer. If I remember correctly, I think it's this cycle it was created, so it's a first cycle coin technically.
Nice.
So it might be something to kind of look at.
Yeah. So I mean,
there's a lot.
Go ahead, Z.
A lot to look at in this one. To get back to the larger point, though, the reason why this is a story is that, is having options trading a new invention? No. Is having options trading widely available for some of the most popular crypto products, is that new? I would argue yes. And there's an actual purpose to it. I know that over here in crypto land, we really harp on the idea that leverage is how you get wrecked. However, in the traditional markets, when leverage is used correctly, it can also sometimes be a hedge, which is that you can use it to either hold on to realized gains up to a certain percentage or up to a certain date that you want to get past, just so that in the odd case that your token does go back down below a threshold, you can protect the gains that you've made. Yes. What this is going to do is it's going to allow larger players, especially traditional finance and some of the people that even maybe control these exchange listings, is that they now have the ability to kind of hedge their bets and prevent downside. Yes. Because if you make a bunch of gains and then you take a short out on those gains, it means that if your token drops, you make money. But if that token doesn't drop, it means, cool, you still just hold on to all the gains you just made, and then you just pay like a small fee to create that options contract.
Yep.
There's levels to this. There are ways to play the game, and when you have players this size, these are the kinds of people that can really utilize these tools effectively.
Yeah. And here's another thing, right? Using leverage correctly to mitigate your risk is actually a thing. You can take a leverage position on a particular crypto asset, right? Which reduces the amount of actual capital exposure that you have to put into the market, right? Like you can do like a 10x leverage off of like a small capital position, as opposed to investing that much into the particular asset, right? So you have some exposure, but you didn't have to you didn't have to introduce the kind of capital risk that you would have had to if you would have had to buy that much spot, right? So they're like Z said, there's a lot of different levels. So when it comes to playing leverage, but I think most of our audience, they're like early to intermediate level players in crypto. And so leverage is probably one of those things that you want to experiment with somewhere down along the line. You don't want to play around with it now. Play like if you want to practice a skill, do a small amount just to practice the skill, but like focus on your fundamentals first, right? Focus on your TA, focus on your fundamental analysis, throw in some on-chain data, and then you can start playing around with the more advanced stuff, right?
Definitely. So when it comes to options trading, the way that options trading really pays off is if you do it in a market where there's movement either direction. That is where if you are the one buying options, the contracts, you purchase the contract in expectations to exercise it at the end of the date, or you can sell it to someone who wants to exercise it, aka do the action you bought it for. Those work very well in markets that move largely. They don't work so well in markets that chop sideways. What I mean by that is that if you anticipate a market chopping sideways, you want to be on the other side of the contract, which is you want to sell the contract to people. You don't want to buy it in anticipation of movement. You want to sell it in expectation of no movement. So what market do you think has a lot of movement in it? Is it A, stocks, B, bonds, or C, crypto? The answer is crypto, obviously. Yeah. We all know what's going on here. Yeah. But yeah, again, the reason why the traditional wisdom within the crypto space has been to stay away from options trading, very, very much stay away from options trading in crypto, is because the volatility has not been a benefactor to the size of movement that makes options trading worth it. The volatility is both directions, which means that you can get liquidated easier, which is you could be doing well one way, and then you just get some random scam wick that drops down and then immediately rebounds. But because you hit that drop low enough, all of the limits and all of the red flags get tripped, and then you get leverage checked, and then you get liquidated. So this is a very complex topic. I apologize if I'm getting a bit neurotic with it. But just to give a quick recap, the way that volatility and the degenerate index works is that you have bonds at the bottom. These are the least degenerate. Stocks are above that. These are a little bit more, but they don't even make that many gains. Once you start options trading stocks, now you can get some real movement going. Crypto is above that. So if you want to do crypto options trading, you are now at the 5th level. You are at the top of that risk degen pyramid. This is rivaling meme coins at this point. That is what this is. I'm just saying.
Freaking leverage, guys. Don't do leverage.
Exactly.
Crypto leverages itself, too. That's the stupid thing. It is so wild in its price appreciation.
That's why.
It's like, why do you need to leverage it?
You have the leverage. You don't need more. It's okay. It'll be okay.
The only time that I would ever consider taking out a loan or taking some kind of leverage, like taking some kind of loan out, right, which is leverage, is probably at the bottom of the bear market, right? I'd like put whether it's through a credit card or taking a personal loan out at the very bottom of 2022. That's probably the only time. Like once those on-chain indicators flash oversold, we're about to go into a reversal, right? And the on-chain data is pretty good at determining when those times occur in the market. That's really the only time I would ever consider taking out like a personal loan or putting a bunch of crypto on my credit cards, bro. It's such an easy dub.
Okay, credit cards, that might be something else entirely. However, I do have a bit of a degenerate play. I may have looked into the numbers recently about theoretically. Imagine this. You get yourself a $10,000 personal loan at 12% APR, and you pay it back over 3-4 years. What you're looking at is you are borrowing $10,000 today to pay back about $12,500 over the course of 3 years, and your monthly payment is going to be about $450 to $500.
Manageable.
So imagine if you were some crazy person who already had a monthly DCA of at least $500, and you're like, I wonder, what if I just get this now because we're in the bull run? I'm not saying do this.
Is it hypothetical or is this a personal story?
It's still technically hypothetical. However,
okay, I thought you were talking about me.
No, I was talking about me, which is that I may have requested a quote for this just to see what the numbers were so we can work it out. And it's like, is stuff like that degenerate? Absolutely. Is it less degenerate than putting it on a credit card? 100%.
Bro, but here's the
put it on a credit card.
Here's the caveat. Here's the freaking caveat, folks. If I was going to do this, you know where I would put that capital? I'm gonna put it in Bitcoin, bro. Like
the safest one you can find.
Oh my if I took a personal loan, put that shit on like shit coins, oh good Lord, have mercy. No, man, you put it in Bitcoin or Ethereum. That's it, man. That's it. Not financial advice.
Not financial advice.
Dude, I took out I took out 3 loans equaling right around $7,000. And 4 of that was, at the literal bottom of the bear market. And then 2,000 of that was for the literal bottom of Pulse.
Yeah.
And then just recently I did it again for the
So
second
here's
bottom.
the thing. If you got good credit and you could take advantage of like delayed interest payments, like come on, man. It's like such an obvious and easy move. Not financial
That was on my
advice,
credit card too.
We do have to be very careful here. Are we people that are doing the numbers and we think to ourselves, oh, wow, these numbers make sense. I can swing this. This works. Yes, the numbers make sense now. It doesn't mean that your numbers are going to be the same forever. Just be careful. Be very, very careful.
Be careful.
But at the same time, scared money don't make money. Let's go.
Exactly, man.
Oh, this is fucking A, man. All right. What else we got? We can get off the DGen topics and talk about macro, or we could even talk about our favorite or least favorite federal agency, the SEC. Someone flip a coin here.
I thought you wanted to share something that okay.
Oh, the old rags to riches.
Yeah, rags to riches. Do not like, comment, or subscribe.
He has a great tagline with that, I will say.
I don't agree with him, though. I think you should like, comment, and subscribe for sure.
You absolutely should. Even to his channel. Especially his channel. But also
especially
us.
to our channel. Like the damn
While
video.
you're at it. While you're down there. Might as well. Just saying. All right, here's what we got. This is a tweet from Brandon Davis, aka Rags to Riches Fam on Twitter/X. He says the most important chart for 2024 to 2025 bull run has just reached an all-time high. Global liquidity now at $94 trillion. Many indicators and analysts show strong correlation between global liquidity and crypto market price appreciation.
That's what you like to see. You like to see the global liquidity increasing, because where's that money going to be injected?
More money.
That's
for
true.
me.
However, at the same time, there are 2 very specific letter number combination here that we want to point out, which is that this is the global M2 supply. This is pretty much all of like dollars or pesos or the rupees and in circulation and in savings. So that is what we're looking at here. So this is a chart. This is similar to a chart that we actually talked about when we had Access Live on previously, which was trying to chart the Bitcoin price against the US M2 dollar money supply. And one of the interesting things was that we previously had not crossed a high that we hit back in 2017. So even that 2021, 2022 top, it didn't break through the pure amount of money printing that happened between then and 2017. So now when we're looking at a chart like this is showing that obviously the US is a large part of this global liquidity. However, at the same time, it does incorporate everyone else. But when you look at this charted against the Bitcoin price, it looks like we're actually getting into a point where both of these charts are going to be moving into all-time high territory. And I know it's very easy to forget this, but we are already in Bitcoin all-time high territory. Anything past that, what was it, 74,500? That was our top. So we're sitting at like 69,000 right now. We're already in all-time high territory. And until they turn on the money printers, we're going to keep gaining against the M2 money supply.
Yep.
AKA
Man, look at
Bitcoin outpaces inflation.
Yeah.
Absolutely. Man, look at 2022. That's absolutely wild just how much money printing happened there.
Mm-hmm.
Oh, absolutely.
Yeah, man. I mean, 50% of all the money in circulation was printed within the time course of like, I think between 2020 and 2022.
Jesus.
So not surprising. Z, since we're sharing a bit of on-chain data, I had a few more particular points that I wanted to just to kind of hammer home to the audience that we are in a bull market and that all of the smart money is buying. Let me show a few charts here. So this
get
one in
after it.
particular.
I will just throw out to the panel real quick. Just remember, we are at about hour 35 right now. So let's close off with our events coming up for the week. Well, let's keep going on this topic.
for sure.
This is good stuff right now.
Yeah. So this right here, Bitcoin has just reached. So remember, we spoke about this a few weeks ago in the emergency meeting streams, right? But now Bitcoin has the total balance of Bitcoin on centralized exchanges has hit another new all-time low, right? That means what? When there is money, there is Bitcoin in particular, in this case, being funneled out of centralized exchanges. That means they are being transferred onto either self-custody hot wallets or cold wallets, which means people are not selling, which means there is less and less Bitcoin out there on the markets. That's number one. Number two, we also spoke about this particular topic. So let me pull it up. So we just went over Bitcoin. Surprise, surprise. How about Ethereum? Ethereum just hit an 8-year low supply on centralized exchanges. Once again, this is something that we also covered over the past few weeks on the emergency streams. But here again, right? The on-chain data is reflecting the amount of crypto, in particular, the two largest assets by market cap in our space, Bitcoin and Ethereum, just hit. So Bitcoin all-time low on centralized exchanges. This is an 8-year low for Ethereum on centralized exchanges, right? So people are also taking their Ethereum off of Sexus, moving it into self-custody wallets because nobody is selling, right? Unless you're a weak-handed, mid-curve type of person.
Sure.
A few more things.
Jump in here real quick to hammer home the psychology of it. When you look at the amount of coins that are on the centralized exchanges, it harkens back to the idea that a lot of people throw out there, which is that these centralized exchanges, unfortunately, kind of are the Achilles heel of the crypto space right now, which is that they're really the only on and off ramp for crypto to dollars. So when you have tokens on the exchanges, it means that people have been extracting dollars. And when crypto is off the exchanges, it obviously means that people have been extracting crypto. So right now, we're in the extract crypto phase instead of the extract dollar phase, which means that people are building the bags in anticipation of either holding forever or long term, or they're going to be selling later. So when we have that smaller supply, basic supply and demand charts also show, price go up. So it gives you that expectation in the market right now. And right now, the expectation of the market is showing that everyone wants to hold on to it and hold on to it for now.
Yeah, and when you say sell later, when are we thinking? Next year.
Yep, Q2, Q3 of 2025.
I'm just saying 2025 is a nice number. It's a good number.
Speaking of 25, what's this?
Here is more on-chain data for you folks. So this is the weekly amount of Bitcoin that had been mined. So 2,250, and look at that bottom number compared
that is
to the
all
amount
buying pressure right there.
Yes, combined.
Oh my god!
Compared to the amount of actual Bitcoin mined this week, look at how much the ETFs bought. That is more than a 10x, right? So they bought over 10x the amount of Bitcoin versus the new Bitcoin mined just in this 1 week. So do you think this has something to do with the amount of Bitcoin being drained from exchanges? I think so, right? And then lastly, on this topic of on-chain data, also on mining, I told you guys, man, we got a lot of alpha for you guys. And this is the on-chain stuff. The on-chain data doesn't lie. Here's another. Chart reflects the amount of Bitcoin acquired over 2024 versus mined. The ETFs acquired over 200% of the mined Bitcoin since 2024 started. So that is to just hammer home the fact. Once again, do you think these people are selling?
Hell no.
Right? Don't mid-curve this, guys. Don't be the mid-curve, okay? Don't be the guy in the middle of the bell curve, okay? Be either the Will Stevenson, Diamond Hands, Peanut Brain, or be the people like us who's going over the fundamentals and the technicals for you, right? Don't mid-curve the fuck out of this shit, guys. Because the smart money, they're buying 200% of the total Bitcoin mine the ETFs have bought. Bro,
I see us actually going higher than that, or the I see the ETFs going actually higher than that too. I think the more and more like, well, I think it's gonna be Ethereum, to tell you the truth. Actually, when you're looking at it, the Bitcoin. What do you guys think? Do you think they're gonna start buying more as time goes on here, as we're getting into like the end of 2024, 2025, or you think they're gonna just kind of stick at a steady pace?
Z, you want to tackle this one first?
I mean, my traditional theory on this is that the later into the cycle you go, Bitcoin is going to start to perform worse and worse compared to everyone else. However, I got to say, if there was ever a cycle to be a Bitcoin maxi, it kind of feels like it's this one, especially if you missed out on like being in the early days. Because right now, Bitcoin it's done some pretty wild numbers. Even since the beginning of the year, it's technically up 57% if you go to current price, 50 or 67% if you go to all-time highs. And if you want to start measuring from that low that we had towards the middle end of January, it's 91%. So that graph we just pulled up showed that the ETFs alone purchased 200% of the Bitcoin supply that came out.
Yep.
Which means that not only did they buy the entire supply, they bought the entire supply twice over. Yeah. So it damn near translates to a perfect 2x on the chart as well. But that's even when you start from 38,000 and change. When you go back to like, we had a 25.5 low back in November, and then we even had lows back in March of 2023 of like 19,000. And then you had the absolute low down there at 15,000. That's right. There used to be $15,000 Bitcoin within the last 2 years. Last 2 years.
And you used to be able to buy GBTC at a 50% premium.
On top of that, yeah, exactly. It's wild. So like, are the Bitcoiners kind of taking their victory lap? Yeah. Yes, they are. Hats off, boys. Good one. Done some good work. But you watch out. The rest of the market will come with a vengeance for those gains.
Oh yeah.
And believe me, they're
it's gonna be the dominance chart. That's what we're gonna have to start watching. That dominance chart, especially with like, here's the thing, guys. Okay. I think people are forgetting this. Yes, the Ethereum ETFs were approved, but they're not trading right now.
Yeah.
So
Bingo.
that means that buying pressure of the ETF is not doing anything to Ethereum right now. It's literally just like, oh, they're approved. Now we're waiting to start that. Okay. What happens when we get that buying pressure? It's going to go insane. And that dominance chart is going to go from like, haha, Ethereum's dead to, oh my God.
The only thing that the approvals did for Ethereum was that it brought up the floor price. Right? It brought up the floor price. I don't think you're so I this is my opinion. I don't think you're going to be able to get Ethereum below 3,000 anymore until the very next bear market. So what the ETFs did for the floor price of Ethereum, bringing it back up to close to 4,000. Yeah, sorry guys. Look, we were we were some of the few people ringing the bells. You better accumulate Ethereum under 3,000 if you can. And when that announcement came through, you're not going to get Ethereum below 3,000. The same way that I've been harping on people, Bitcoin is not going to go below its 20-week moving average. 20-week moving average has moved up to about 61.5 right now. So I don't think we're going to get below $60,000 Bitcoin in the foreseeable future. Sorry, guys. But
you know what? You want to hear a funny story?
So
the day before the Ethereum God Whale, right? Or God Whale, sorry, God Candle, right? The day before, I got a friend who, he's actually my boss as well now, but he was like, oh, I'm thinking maybe I should put some more money into crypto. And I'm like, buy Ethereum. Ethereum right now, anything below 3,000 Ethereum is an absolute steal. And at this time, it was like 2,800 or whatever.
Yep, 800.
I was like, you need to buy more. He's like, okay, cool. I'll throw some in there. The next day, I sent him the Ethereum chart.
30% pump, bro. 30% pump in like a few days. Like, that's nothing to sneeze at when it comes to Ethereum. Right. So, but to answer your question, Nate, do I think that they're going to start slowing down the pace of accumulation of Bitcoin? if Mrs. Producer could pull up my screen, there's my answer right here. So Fidelity, a few days ago, just bought another 5,380 Bitcoin. So do I think they're going to start slowing that pace down? The answer is no.
God, just a casual $380 million. Just a Tuesday,
Casual.
you know, super casual.
Like, remember, like it's Fidelity, Grayscale, and IBIT, BlackRock that's competing, right? They're basically the ones that are neck and neck. I think Fidelity has a long ways to catch up because right now it's between Grayscale and BlackRock, but they're like, Fidelity's like, we were here before all of you. How dare you? How dare you lap us? Yeah, Fidelity was here for a while, guys. So if I was in their position, bro, I'd be kind of salty. But I mean, you don't have as much money as BlackRock. Sorry.
Yeah, it is kind of unfair at that point, you know, but it is what it is, you know.
Yeah.
I know they always characterize it as kind of like these are individual entities that keep fighting against each other. I encourage people, if you get a chance, go just look at the ownership percentages of each company. There's kind of like this like weird incestuous relationship where it's like each one of them owns like 5 to 10% of each other. So it's like this incorporated just blob almost sometimes where it's like you can't really tell where one company ends and the other begins. However, at the same time, there are still individual entities for sure, and they have their own inner workings and mechanisms and whatever. But at the same time, when the ownership starts to get mixed up there, that's where you can really put on the tinfoil hat and start making some masterpieces.
Yeah. You know, one thing that I learned that was really really eye-opening, that somebody told me that when you get to that level of fuck you money, right? When you have so much money that you don't know what to do with, the only thing that matters to you is having more money than the next guy. It's not even about buying things anymore. It's like, do I have more money than my neighbor? Yeah.
You thought it was a pissing contest in high school?
Pissing contest.
Oh, you thought. Just wait till you get to the billionaires.
Yeah. So, but
dick measuring contest on the highest level.
Exactly. God.
But
It's
that's
crazy
my
to
thought.
think that, yeah, this is like almost nation state money at this point. Like these these companies are like the GDPs of like some nations, like mid-sized nations. Not talking about like the Republic of Congo or something. Like, my God. All right, boys, let's talk about the upcoming events for this week. Mrs. Producer, if you don't mind, I do have some screens to share.
Nate, is Z choppy on your end?
Yeah, kind of like
how am I
laggy.
now?
You are good now.
All right,
Were you
we
bringing
should be
something
back.
up?
Yes, I'm bringing back. We're getting to our macroeconomic events for the stream. So if you somehow survived through this and got no alpha out of it, like a crazy person, this is macroeconomic news for you. We have 2 major points coming up and a third that we're going to have Jay talk about as well. So first off, you'll notice that June 11th and 12th, we have the FOMC, aka the Federal Reserve, is talking about interest rates again. And if we go to our prediction tool, aka the CME FedWatch tool, June 12th, 99.4% chance of no change in the interest rates. Interesting. Interesting to see. I will say this much. If we go down,
99?
yeah, 99.4.
Who's the one dude that was like, no, they are gonna cut.
One dude.
Look, there's always somebody betting against in the futures market just to be safe. Just to be safe. So there you go. But yeah, it's interesting to see because even a month ago when they were looking at this one, they said it was a 91.6% chance, and now we're at 99% chance. So it's like we've definitely solidified. But there is an interesting note I will point out, which is that in the past, we showed that there was even the possibility or a higher probability of getting multiple rate cuts for the year. But if we go up, here's the next meeting, 91%. And the next meeting, 53%. And only once you get past the election, because I'm pretty sure the election is on November 5th, this is the November 7th meeting, only then do you get the highest probability for a rate cut at 45.9%. And even then, we don't get to a higher probability for more than one rate cut for the rest of the year. So that is the direction that we've been going, is that people were talking about 3 rate cuts back at the end of 2023. Now we're in 2024. It's looking like 1 is the most likely suggestion, and still 0 before the election.
Our very own anonymous bean Brendan, he literally says that there's not going to be a single rate cut this year.
I believe it. I fully believe that. That is a very, very plausible theory, and I understand why. And then additionally, the reason for that is because allegedly, if you believe Jerome Powell, which honestly, out of all the Fed chairs, he's the one to take at face value. He pulls his decision making from this right here, which is the old CPI numbers. He's talked about how the CPI, unemployment, are really the two things that factor into how the Fed makes its decisions. A lot of people think that it's pretty much two factors, which is that you have inflation and interest rates, but unemployment is that magic third number that factors itself into this as well, which is that if you follow a lot of the pressers, he talks about how if they're continuing to try to fight inflation, however, if unemployment starts to take a spike up too high, that is another reason to take action. So those are the two factors you got to be watching out for to see those interest rates decrease. And specifically, we have, again, look at this. Oh, wow, June 12th. It's almost like we have two major macroeconomic news events coming out on the same day.
Yep. Next week.
Yes, sir. Yes, sir. And on top of that, we even had another thing come out recently. Jay, what is this?
So this is the jobs report. If you guys, I think this came out on Friday. So remember, Friday morning, people were anticipating that the jobs reports were going to come in weaker than expected, which is why we had a rally close to knocking out that current all-time cycle high at about 71,900, give or take some change, right? We came very close. However, if you guys look at the 10-minute charts, the 10-minute chart, like literally the next candle, right after these numbers were posted, it dropped down to like about 70,500. The reason for that was the expectation was that the non-farming job numbers were estimated to come in at about 180,000 or so. It came in at way above estimations at about 270,000 plus change. And so people thought, whoa, the labor market is really strong. They created a ton of jobs. And so people panic sold because they thought, okay, that means JP is probably going to not float the idea of cutting interest rates come next week, right? Because of the strong labor market conditions. And like Z alluded to earlier, that unemployment number, like the jobs market data, is that magic third number. When JP says we want softening in the job market in order to consider cutting rates, he means that he wants people to lose jobs, right? He's not going to say that outright, but that's what softening labor market conditions means. But here's the thing, right? Just because there were more jobs created doesn't mean that there are actually more people working. And this is what kind of confused me, because yes, you had 270,000 jobs created, but then you look at the unemployment numbers, and the unemployment number went from 3.9 to 4.0 to 4%. So it's like more jobs being created is not necessarily reflective of people entering the labor market, right? So I think like people lost the sauce there. The unemployment numbers went up. Yes, it's only like 0.01%. Still went up. That's not reflective of a strong labor market. If you have unemployment rising, right? People keep posting job openings out there, but if people aren't taking it, then you don't have a strong labor market. So there's the gist of it. People completely lost the sauce there.
Well, okay, so how the hell do you do that then? Okay, so this is payroll employment increased. Okay, so on the sheets, the payroll has had people getting paid out. Okay, so aka jobs, but yet unemployment rate is also going up. Is that just more people in general? Are we getting a lot of people like coming in? Is that the deal here?
That I'm uncertain, but I can tell you that the unemployment rate is reflective of people either not going into the workforce or people losing their jobs. Right?
There's also a magical third part to this, which is how you determine who is who.
Yes.
Because
are you considering part-time?
There's part-time, there's full-time, there's overemployed, but there's also discouraged workers who technically end up getting taken out of the unemployment pool, which is that this only counts people that have been job seeking for up to 6 months, I believe.
Yes.
So once you get past that 6 months marker, if you still have not found a job, you technically fall out of the unemployment rate calculations. But at the same time, like, yeah, you're still unemployed technically, but according to the survey, you might not be.
Yeah, I mean, you all of us know here, Z. This is how they gerrymander the data, right?
Correct.
They
very correct.
They're cooking the numbers. That's long story short.
Yeah, but at the same time, though, whether or not you like how they measure it or believe that the numbers are showing things they are or not, at the end of the day, these are trends, and you can plot them over time. And if you look at chart number 1 over there, guess what? That is going up and to the right, and that is not a chart that you want to go up and to the right.
And so Sniper had a fantastic comment in regards to this in the Telegram chat. So he mentions the fact that people are taking second and third jobs. That factors into their labor market calculations, right? They don't consider that as one person in the labor market. They consider that if you have a second or third job, they're going to consider that as 3 individuals, right? So again, it's just another one of those ways where when they calculate these numbers, there are a lot of ways for them to gerrymander this data by cherry picking the information that they want, right? And also modifying the time frames, right? Bean talks about this all the time. They modify the time frame in which they calculate CPI. That's a way that they can cook the numbers, right? So that's all we have to say on that, basically.
For sure. The last point that we don't have on paper here to show you guys is that the inflation data is still at 3.4% for the last month. It technically was better than the month previous, which was 3.5. So people were celebrating that 0.1% decrease. However, at the same time, inflation is still elevated. Jobs are not really getting better. If anything, they're showing that they're getting worse. And the economy as a whole, thankfully, technically is still making new all-time highs. The S&P 500 did have a new all-time high on Friday. However, that is it's still not really where it should be if you try to go for that 10-year annualized 10% target. So there's a lot of factors to consider. And if you go back to the FedWatch tool that we showed you earlier, 99% chance that we're going to get no rate cut. I mean, call me crazy here, but I'm kind of one of those weirdos that says we probably could have used 1 or 2 more increases even just to really tamp down inflation.
Yeah, just spike it up a whole basis point and then be gone.
Yeah. Or what other people were asking, like JP, just instead of 25, just make it 50, bro. If you don't want to extend the increases, just let us take a bigger hit. Like we're already in the shitter anyway. So, but look, man, I'm not going to pretend that I know all the things that JP's burdened with, all the responsibilities that he has. But I mean, at the end of the day, whatever excuse he tries to make, it's like, but yeah.
Jay, final point. I got something I want to ask you about, which is that we mentioned it previously, but when it comes to the actual Bitcoin price and the cycle count, did you have it as still the 20-day cycle high, or did we make that new high on day 37?
No, sir. The cycle high is still on day number 20 of the current cycle. I don't care if it was only by like a few dollars. Cycle high is on day 20. But like we were talking about earlier, 2 major macro events coming up next week. CPI, Fed meeting. If CPI numbers come in better than, even if it's only by 0.1% like it was last month, if they come in better than expected, and JP floats the idea, even if he's a little bit dovish, watch out, man. We are going to get the 2 right translated cycles, like I've been speaking about, right? And it is really late, right, for us to get a well, it's not really late, right? But I think we could potentially have an extended right translated cycle because we're getting that cycle high pretty late into the latter half, right? And so I think there's a potential for us to go into an extended right translated cycle if we pump into next week. And I think the probabilities favor the bulls. They do. right? That 20-day moving average is serving a strong support. We are trading way above that, right? We're getting rejected at the very top of that Bollinger Band. We're getting rejected at around $72,000 Bitcoin, but you test that number enough times, especially with all this momentum coming into next week. It's not going to take a lot for the bulls to punch through that $72,000 mark.
Yeah,
go for it, Nate.
Oh, I was just gonna say the right translated cycle is what we want, anyways, because in the words of the great JP over here, right translated means higher for longer.
Higher for longer, indeed.
Sure. Tell you what, we'll close out real quick. I had one last interesting point I wanted to throw at the chart. So, Mrs. Producer, if you don't mind pulling it up, I have a bit of a oddity per se, which is that one of the main things that I focus on with my technical analysis is looking at those moving averages for indicators about which way momentum is going. On Bitcoin, we're above the 20-day moving average, well above the 50, and well above the 111-day moving average. On Ethereum, we just dipped below the 20-day moving average, but still well above the other two.
Hey, Z.
Yeah, what's up?
Could you go back to Ethereum? Can you turn on the Bollinger Bands on Ethereum? That's a nice little picture there. Look at that squeeze.
Oh shit, that's gonna pop, man. Oh my god. Though they start trading the ETFs. Oh my god.
Prime, bro.
Oh.
Remember what we always say. When Ethereum, Bitcoin gets trapped between a rock and a hard place, you combine that with some of the major macro events that are going to come through next week, it is primed to make a move.
I'm going to go long Ethereum real quick.
Look how long we've been trading sideways, right? That's almost 2 weeks of sideways trading.
Well, we've been honestly, if you think about it, we kind of been trading sideways ever since Bitcoin made that all-time high back in early March. Since then, it's been a lot of pretty similar stuff. Granted, we held that 28.5 level the 2,850 level. We held that very strongly, and then we popped up here, but it's been pretty consolidated since that last all-time high.
But what matters is Ethereum is trading above that bull market trend line. That's what matters. Ethereum had a tendency to lose it versus Bitcoin, which was trading above it, but Ethereum is holding that long-term bull market trend line. So,
yes, sir. But the point that I wanted to bring up here is that, so we just covered Bitcoin and Ethereum. They both are well above the majority, or almost but one, of all of their moving average indicators. The further you start getting into the altcoins, you get a very different story. This is Solana. Solana is getting squeezed right here between your 20-day moving average indicator, and then your 50-day is also basically sitting right on top of your 111-day moving, and we're moving towards that downside. If you want to keep getting further into altcoins, here's Phantom. Phantom is now well below all three of them. We're well below that, and additionally, I'm going to talk about another one that I'm tracking and keeping an eye on, Fetch. Fetch AI, now well below all of your moving averages. And then even
that's a good buy zone, by the way.
Yo, you know what the FUD was? You know what the FUD was on Fetch, bro? There was an email circulating around the Twitterverse or the Xverse, I guess, that either Ocean or AGIX, one of those two was not going to support the merge. So that's kind of why you got that pretty steep drop in price for Fetch, because that fucking email was circulating, which obviously was FUD. It was not true. All three have been, so the DAOs have voted pretty much overwhelmingly for the merge. So it's going to happen, but good buying opportunity. I bought more at around $1.80 and I bought more at $1.70.
Attaboy. I just pointed out that if we focus and we spend a lot of time talking about Bitcoin and Ethereum because they lead the market, and through all the liquidity bonding, a lot of this is tied together. However, remember, the altcoins and the plays outside of those main L1s, they have the ability to move in exponentially large moves either up or down. Right now, in my opinion, we're seeing that downside, which, if you're holding it, unfortunate, price has gone down. However, if you wanted to buy more, it seems like it's a pretty good opportunity.
What's the all-time high for fetch?
Right here, about 349.
349. Oh,
And
All right.
projected for fetch, like $20 is a low end for fetch, bro. So
I know,
like,
that's what I was thinking about.
Yeah.
Like, this is a
Yeah,
good
right
buy.
now we're at 50% below all-time highs.
Yep.
Yeah, this is a trend that is currently going across a lot of coins out there. Here's Alluvium. Again, those moving averages stacked in the downwards direction. Thor Swap stacked in the downwards direction. Let's see, Matic also same thing. Dot, same thing. Let's see how Pepe is doing. Pepe is a bit of an exception.
Yeah.
But-
BNB and Pepe exceptions to the rule, folks. There are very few exceptions to the rule. Do not bet on the exceptions.
Yeah, Cardano, AVAX, Crypto.com token, Tonecoin. It is an exception right now. It looks like it's kind of killing it. I'm not gonna lie.
Yep.
So, okay, what I'm seeing off of this then is Ethereum is about to pop, most likely to the upside because the ETFs starting to trade. With that comes alt season, right? So far, the majority of alts are underwater, basically. Extremely good buying zones and are not really climbing at all. So what you're saying right now, Z, is like, hey, you guys better pack your bags quickly with these alts because they're all about to take off quite heavily.
Yeah. Bro, this is why I like Ben Cohen. People always bag on him because he's like Bitcoin dominance, preserve the dollar valuation of your capital by rotating into Bitcoin. It's like, bro, Bitcoin hit an all-time high of 70, what was it? 73, yeah, it's like 73.5. And then during the downtrend, like the altcoins dropped anywhere between 40 to 50%. And now Bitcoin is close again to its all-time high. And the altcoins are still down like 40 to 50%. If you would have rotated into Bitcoin, even if you experienced that drop to like 58.5, you probably wouldn't have sold. Bitcoin went back up to close to all-time high. The altcoins are still down 40 to 50%. You would have been able to rotate into those alts, right? That's why I don't fucking understand. Like, I understand why, because people are maximalists, right? That's why. But like, when I listened to Ben Cohen, and I was like, you know what, man, this guy's making a lot of sense. Yeah, if you rotated to Bitcoin even during the bull market, even if you would have rotated at the top, right, when Bitcoin hit 73.5, you would have only lost like 3 to 4% the dollar valuation of your capital, right? And that would have given you the opportunity to rotate into some of these alts, bro. It's like, oh man, stop being maxis, bro. Like agnostic, coin agnostic.
Yeah, to answer the question that you asked me a little bit before, which was that is now a great time to, are the altcoins just going to absolutely soar after this? It's a distinct possibility. However, what I'm tracking personally is that if we go back to the 60-day cycle counts, we are still yet to see the tail end of this 60-day cycle. Right now, we're on day 40 as of 6 p.m. today, based on where I'm at. But it's like over the next 20 days, price is good chance it's going to be lower than here, which means that if you're looking for buying opportunities, this might be that last buying opportunity before we really take off into the rest of the bull run. And this is in line with a lot of stuff we've been saying for a long, long time, which is that right around that June of 2024 is really might be that last opportunity to pack bags before we start going crazy. Yeah. We've already kind of been going crazy when it comes to the Bitcoin market, but even looking at that, and then thankfully, I mean, it's not thankful that price goes down, but when you're looking at a more normalized 4-year cycle, it has been a good thing that we hit all-time highs and then have stopped going up from there, because this gives a breather, it gives time to recover, and it allows for that 4-year cycle to play out as opposed to going up too fast, too quickly, and then ultimately having too short of a cycle. So when it comes to traditional market forces, which, I mean, it's weird to be on a team for, do you want a left translated or a right translated? It's a very weird team to pick, but it's more of just trying to describe how things work. And the more data that we get to support the Bitcoin 4-year cycle, the more it's more cycles that prove themselves over and over. It's saying that the hypotheses were correct. We can more reliably count on this stuff.
Yeah.
The hypothesis was correct.
I mean,
hey,
that's how you
scientific
build
method, baby.
Yeah, that's how you build a foundational, like a solid foundational investment thesis, right? You have hypotheses, and your hypotheses get proven correct over time, and they become theories, right? They become a thesis. Like Z said, that's basic scientific method, right? You stack up these hypotheses. Once they've been repeated and proven to be correct enough times, they become theories, and eventually the theories might become into laws. But it's a long way into the future.
Exactly. All right, gentlemen. Any final thoughts before we do the old dance on the way out?
No, sir. I believe we beat this one up well.
Yeah, good
Fair
episode.
enough. All right. We're going to go into some final chats then, because shout out to everybody that's watching tonight. Thank you so much. This has been a fun one. I know it's a bit of a different format than we've done previously. We did TA at the end as opposed to the beginning, but it kind of worked out well. Regardless, though, we do want to give some shout outs. So, Mrs. Producer, if you don't mind, it is time to say hello to our friends in the community, starting off with Jemmy. Blackrock making more money, that could be an incentive. That is always an incentive for Blackrock, making more money. I mean, like, who doesn't want to make more money? I'd argue they are largely driven, especially by that.
Well, Disney doesn't want to make money.
Yeah, they've had a weird allergy that's developed lately. They really hate money, and they hate
money, man.
Good Star Wars content.
Yeah.
I don't understand why, but I don't know. Talk to Lucasfilms about that one. All right, up next, we got Paul Sachs. He says, good to see you boys. Replay gang for me. Good to see you, Paul Sachs. Replay gang is always in our hearts, and shout out to all you guys that are there right now. Up next, we have Co-Ripto Stylist. She says, hello to my fellow D-Gens. Good to see you as always. Always a pleasure to have you on. Hopefully, we're actually, we want to stream together with you at some point in the near future. So let us know what dates work for you, and we're going to get something going. And then last but not least, we have Russ. Just a fire emoji, because it is pure fire. Much appreciated, brother. We, again, thanks to everybody for coming out here. This has been a good stream. I hope we gave some alpha, a lot of content. And yeah, this is one of those times where it feels like we've been chopping sideways, but don't be surprised if it stops chopping sideways soon. That's what we got to say on that one. So with that being said, Nate, go ahead and start us off. Where can the people find you, my man?
Right on. I am the Ascending Man, Nate McGettit from the DJ Roundtable. You can find me right there in the Telegram. Get in there. All this alpha that we're dropping here, you can easily find there. Not only that, but you get direct access to us. So you can literally just tag us. Hey, what do you think about this? And we'll give you our honest opinion. So yeah, make sure you get in there. But then also, come on, like and subscribe the video, guys. I mean, come on. Where else are you going to find this? I know Sami likes to say he's got the highest value highest value content in crypto, but he's wrong. It's actually us.
Right here.
Because
it's right here, baby.
It is right here. The fact is he's one guy. He gives a lot of high value stuff, but there's multiple people here giving high value alpha. Come on. You already know what it is. So with that, I will go ahead and pass it over to Jay. What's up?
Yeah, folks, as always, thank you for joining us this wonderful Sunday evening. We know that time is your most valuable asset, so we do appreciate that you spend your time here with us. As always, you can find me on X at _P90Hex and on Instagram at agent_J Schroth. We got Whiskey Wednesday coming up this Wednesday, so that would be we got a fun stream plan for you guys. And if there's anything that you didn't, if there's one thing that you took away that you can take away from the stream, is that the market is overly bullish. Don't let the 2 to 3% price fluctuations from Bitcoin scare you into selling your bags into the hands of people like Larry Fink and BlackRock and Fidelity and others. So that's all I got. Z, take us out.
Will do. I am Zenith. You can find me at ZenithDI on Twitter and X, or you can actually catch me tomorrow afternoon. I'm going to be on RH Max's channel. He asked me to come over there for a community stream, so I have a feeling we're going to be talking about the Gifford Tech products, which I am more than happy to talk about our friends and let everyone know what's going on with their stuff. Other than that, yeah, find me on Telegram, Twitter. If you have any questions, ask us. But other than that, Mrs. Producer, get that trigger finger ready, because like Jay said, we really appreciate each and every one of you guys coming each and every time. And until we catch you guys next time, I hope you all degen responsibly.